Well, I think we're going to have to see what happens. In the last version of tax reform, carried interest, you needed to extend hold periods from 1 year to 3 years to line up in terms of long-term ownership. I think a lot of things will be on the table depending on the outlook in terms of what the mix between the White House and Congress is. So I think we just have to wait and see.
What are you seeing in terms of deal activity? Has the coronavirus concerns impacted any decision-making over the last month or so and ahead of the election? Do you see that creating some sort of flurry for deals or something like that?
We haven't seen corporate deals or real estate or infrastructure deals really affected so much by the election. I think the coronavirus, when it was seen more as a China phenomena, really slowed deal activity there. But as it starts to expand, it could have an impact. Again, for us as long-term investors, what we're trying to do is look out over time and say, what's going to happen with this business when we look out 5, 7 years? And so you try not to get too caught up in what's happening. Now, what can get impacted are financing markets, risk aversion, and then some businesses in the supply chain, travel-related businesses, energy businesses, they can be impacted by what's happening. I think right now it's too soon to say, but if the duration of this goes on and spreads more, then yes, it will impact markets and deal activity.
John, your stock was on an absolute tear last year. It was up around 90%, and that certainly coincided with strong fundamental results that you reported. But I think it's fair to say that the main catalyst was changing to a C Corp structure for the share price. Do you see that as just a one-year catalyst, or is that going to have a lasting impact as your shareholder makeup shifts? And have you observed any major shifts in terms of who's holding the stock now?
Yeah. Well, we have seen a material shift, and you're right, Wilfred. In terms of what's happened was we had a security, a publicly traded partnership that couldn't be owned by many shareholders, mutual funds, index funds, foreign investors. And so we had this huge discount built into the stock. When we converted to a C Corp, the market reacted positively. And then I think what you have to look at is, forget that we had a big run-up last year. How are we trading today? And if you look at the numbers, we have a dividend yield that is about 50% higher than the market. Historically, we've grown earnings at about double the market rate, and yet we trade at the market multiple, and we feel great. We're in a very fast-growing alternative space. I'm here in Las Vegas talking to retail investors about alternatives. This is a space that is attracting lots of capital in the asset management area, and we're the leader in this business. So we feel very good about the company and our long-term prospects.
Just related to that, KKR recently moved up after it said it wanted to be included in the Russell U.S. indexes. Is that something that you're looking at as well, expand that shareholder base even more?
Well, we're hopeful a bunch of the indices will make decisions that incorporate us. Right now, a little less than half of the major indexes include us. So I think there's an opportunity, given our size, our market cap, our growth profile. We think we've done a great job for shareholders and certainly our investors, and we're hopeful that we'll get included into more of these indices over time.
I just wanted to come back, John, if I may, to the private market company valuations that we talked about earlier. Do you think that WeWork had an impact on private company valuations as a whole, given that it was such a high-profile case of carrying supposedly $96 billion valuations, then all of a sudden only a tenth of that? Did that sort of burst the bubble a little bit, as it were, and start to see the needle move in the other direction, make valuations more reasonable again?
Yeah, I think it was a healthy sign. I mean, one of the things about markets is we tend to get in trouble when we have bubbles and excesses. And so the idea that a company, the public markets look at it soberly, and as a result, it sends a signal to private markets. And the issue was companies were given a lot of capital, loss-making wasn't considered, it was all about growth. And even for fast-growing businesses, you want them to have some financial discipline. And so what that mechanism did is, I think it translated to private market investors to say, look, you're a fast-growing company. I'm going to be a little more disciplined on how quickly you grow, how much capital I'm going to give you. And so I think that was a healthy sign, and it shows that markets, I know there's a lot of discussion about bubbles. I don't think we're anywhere near where we were back in an environment like 06, 07.
When I talked to Jim Breyer, your board member at Blackstone at Davos, he said that he learned everything about WeWork from you, whom he called the smartest real estate investor he knows, and that you never said, apparently, that it was a real company. I'm wondering if there were any ripple effects on the real estate market as a result of what's been happening to WeWork.
Well, first off, Jim Breyer is a terrific board member and a great technology investor and life science investor. As it relates to WeWork, my concerns were not that the business model, leasing space and then creating a great environment, releasing space, that wasn't a viable model. It was really the scale it was done at, some of the smaller markets, the pace of expansion, and the valuations. And so, again, I think the fact that they're doing a good job, I think now refocusing on sort of the core mission. I think the business can survive, but I think the valuation expectations have to be much more moderate than they were before. In terms of the real estate market impact, I think it may slow a little bit of these flexible office managers in terms of leasing space, but I don't think it's really material. What will drive demand in office markets is what's happening in underlying economic activity. If that remains strong, then things will be fine. If the virus or other factors lead to a slowdown, that'll have an impact on office market and its strength.
It was good to have you here today, Jonathan. Thank you for joining us.
Great to be here. Take care.